I can look at your chart in 5 seconds and I'll tell you if your POI is going to fail or not. And this is how I am able to do that. The first thing is, let's establish the position of POI in a full trading system or strategy. I mean, at what point exactly do we get to need POIs, right? And look at this. I have a framework I am working with here. The first thing is directional bias, then order flow and entry. So I believe that POI is actually a thing, a factor that we need under entry, right? After you've gotten your bias right, you've gotten the order flow leading to your destination, which is a draw on liquidity or target, then you can now use entry, which is exactly the point you want to engage. And that's when we get to use POI. So POI is not directly the first thing any trader would go to a chart and will say he or she is looking out for as the first point of contact, right? You don't go ahead and start looking for POI on the charts, order block, all these popular POIs that are out there. They are not the first thing we look out for. Every other thing here must have checked out before you get to need your POI. And I'm talking about your bias. Now, under bias, in my mentorship, I teach 4 major engines you can use in getting directional bias, right? The first one of them is the order flow. Then we have the price delivery algorithm, and, we have 2 more like that. Now, whatever thing I'm using to determine my bias here is also going to have an order flow attached to it, right? If, for example, now I know that price should go from a certain, let's say, point of liquidity here. Let me see. If price is going from this point of liquidity here and is going all the way to this high. So if I have something related to this that I can tell that price has taken out a range low. So let's take this as a sell side liquidity, and price needs to trade to a range high right here. What I need to know next is the order flow, which is market structure that will take me there. So I can now start following order flow, which is a structure that will get me to my destination, even though it does inducement, whatever. Now, it is at this point that the POI is going to be needed, because at this point, I would need to know exactly where I'm to get engaged on this chart, exactly where I'm to place my buy orders, following the order flow towards my major draw on liquidity, right? So POI is not the first point of contact. It is like the third, and we need it when we get to entry, okay? So let's get into it. First, I'll be talking about the anatomy of the POI formation, talking about how these old zones are being created in the first place. And I use this particular cycle, which I call the price delivery cycle, right? In this cycle here, the first point of contact is a consolidation. That's the first thing, right? It's like it works in a clockwise manner, okay? And it works like this. So from consolidation, market moves to expansion like this, all the way around. So I'm going to now take you to this chart here. From what we have here, the first thing is consolidation, and the consolidation is known to be a base. We call our point of consolidation a base, right? Inside the consolidation, there's an equilibrium. There's a balance between buyers and sellers. And obviously, everybody knows that demand and supply is what controls price, right? So if I have a balance between buyers and sellers inside this base, inside this range here, right, that means the market is at the tide. The price is hovering at a fair valuation, like at equilibrium. But all of a sudden, if I get a sudden expansion, which is the second thing in our cycle here, from consolidation to expansion, which you can clearly see that here, even on this other side too, we could also have a base leading to an expansion lower. You can see this on that base, which is a consolidation leading to a drop below, right? And that drop below is the expansion lower. Here now we can say that inside this base, demand has been created, right? Because this base here led price to have an expansion to the upside. So we can clearly see that we have an expansion of demand, or a demand zone rather, inside this base. Now, after you have your expansion, the next thing is we have retracement, and lastly reversal. Now, each of these elements that you have here, because this is what I still teaches as the element of a trade setup, right? So each of these elements you are looking at here, they hold something very valuable to us in trading. Now, the first one is our consolidation. It is inside the consolidation that your POI is bettered. That means your demand zone, whatever zone we are going to be trading, is going to be found inside the base. Okay, we call this the base. So we find it inside our consolidation. That's the POI. Now, during the expansion, what do you think has happened? Expansion is the one that bets the imbalance, because during expansion, the market is going to move in one direction. So we're going to have, like in this case, we have buy side imbalance, sell side inefficiency. So we are going to be having imbalance on this leg, right? So expansion creates imbalance. Now, this is one other thing, a factor that we need in verifying if our POI is solid or not. Because once you have a zone that does not have imbalance, that clearly shows that that POI or that zone you have marked does not have expansion. You can see from the cycle here, what validates a POI to be valid is after the consolidation, there must be an expansion. If there's no expansion away from the zone you always mark as your POI, then that clearly shows that that POI might not be the one the market needs to come back to. Because you must understand the reason why price even needs to come back to the POI also, right? Because that's also the factor that helps in making your decisions, following the logic of price. Price returns back to this point because you can see after the expansion, we have retracement. The purpose of retracement is to come back and fill all this imbalance that has been created. That's one. And the second one is to fill unfilled orders, right? We are going to have some unfilled orders inside here. Unfilled orders. So the market also comes back inside this range to come back and fill those unfilled orders. So apart from coming back to mitigate, the imbalance that has been created, the market also comes back to pick up new orders and then they can fly again. Because just so you know, market doesn't actually unload all their orders in the same place. If the market makers want to move price to a certain height now, they will not just add all their positions inside one base. You see, they do that off, like they just create that in sequence. Like they can add orders here, create a new high, they will add another one here. So they keep on adding those orders in batches like that till they get to their target, right? So here we have I think we have been able to see the element of the retracement. Retracement comes back to do that, and lastly we have reversal. Now under reversal is where we always apply the element of liquidity sweep and stuff, right? Here when price comes here, it sweeps out the sell side or something, then it's due for a reversal. But all the same, this particular logic here is what works on any POI or any range you are trying to trade, right? So now that we have seen the anatomy of a POI, we need to look at where POI works, and that is what I call the valid ranges. Okay, you need to know where your POI is definitely going to work, right? And of course, probably we're going to talk about the types of POI, because when I mention something like this as a base, I am actually not still referring to the to consolidating market on the chart. That means you don't have to go to a chart now, and because you're trying to pick your POI, you're looking for where the market has actually had a ranging market like this, and then you now say that the whole of that area is your possible base and stuff. No, your POI does not even, in fact, it can just be a single candle, right? POIs can just be a single candle. So, but when I refer to it as base or a zone like that, I will definitely get to how you can identify POIs on the chart. All of these types of POI, they are the ones that reveal each examples or ways you can spot your POIs on the chart. The first one here, okay, we're talking about where we can find valid POIs. So the POI works in a range. Now, this is very important, because if you get this one wrong, you can see what I did earlier, directional bias to order flow. Now, your POI is expected to be used in a valid range. If not, it's not going to work. No matter how good your POI, it has imbalance, it has everything. If it is not found or you're not using it in a valid range, it is definitely going to flop. Let me use an example like this. When I have a range like this, higher high, higher low, higher high, higher low, and I also have a new high here, creating a shallow pullback to continue high like this. Now, you see, in advanced market structure, which also is what we call the order flow, right? If I have a structure looking like this, where I have my break of structure to the upside, BOS to the top here. I also have under BOS to the top here. You see, most traders here like to make mistakes. Of course, that's the point of teaching the advanced market structure anyways. Because if I look at this shallow pullback, and according to the way I've been taught in basic class, that says higher high, higher low. If I take this high here as my higher high, and I'm taking this low as a higher low, and I'm treating this new move, like this current move that we are looking at here, this low to this high, if I treat it as a valid range or a valid impulse, whereby we always expect, everybody just expects the market to come and do higher high, higher low, and then you'll probably continue going higher. So if I mark a POI inside this range that I'm talking about here, if I should mark a POI here, now no matter how good it's, because you can tell me that, you can argue that the market has broken the previous high, right? Now you might be right based on that, that's an impulse move anyways, but the impulse is not valid. So if you mark your POI in this range from this low to this high and price fails it, of course, that's even expected, because the low in the first place is a weak low, is an inducement low. So that's why the first thing you must do before you can think about getting a valid POI is your range must be correct. If your range is wrong, then trust me, you can say bye-bye to a good or POI. You can just say bye-bye to good POIs. So in a very good range, let's look at this now. When I have this kind of range, my range is still going to be from this is my point A here. That's the range starts, and we have point A here too. We have point B to be the top here. Our point B is always our end of range. So these are points B here. Now, this is not the point B here, and this is not the point B, right? Until price eventually trades into, let's say I have a POI here now. So it is until price makes a complex pullback, which is coming back into this level here, that the POI here can work. So when I'm trying to treat a daily range here now, if I treat this other one I mentioned at the top here, if I treated this move here as an impulse, then you would see that no matter the amount of POI, no matter the level of scrutiny I take in choosing that POI above here, is going to fail because it's not a valid range. Now, this is a valid range, and on this valid range is where I can now find my POI. So the first law of choosing POI is get a valid range. Very important. One other thing that makes a range valid is something like this, where we talk about probably a sweep in liquidity before a break of structure. So that's what we call the ICT daily range. So if I have this now, this also makes a range valid, right? One other thing that I also use in getting valid ranges. So you can see we have a break of structure at the top here. So these are instances where you can be able to say, okay, let's start looking for POI, right? But if you go and get a wrong range, do not mark POI if your range is not valid. So I can now definitely choose, maybe in my aging zone here or my sponsored candle here as my POI, because the range, which is from this low, my point A here to my supposed point B here, is going to be taken as a valid range. But if the range is not valid, definitely the POI will not work. So this is one factor I want you to add into your before you start selecting your POIs, right? So let's see where we are going to next, and how to find your valid POI. You see, that's where we talk about the premium and discount. Now, I have a lot of things to share about POI, quite a number of things, but I will take it step by step so you can understand what I'm about to pass across. And even if I'm unable to even finish everything up in this video, I'll make follow-up videos to explain other aspects of POI selections and also how you can choose the valid ones. So you don't have to worry about, mixing some information up here. So whatever information I did not give today, you would expect to see it in another video from me, right? So let's go over to the next one, how to find valid POI. First thing here is we're going to apply the rule of premium and discounts, right? Because once you find your valid range, which is the first thing anyways, once you find your valid range and you also still know that the market order flow should still continue, because that's another factor again. As long as the order flow still indicates that price needs to continue, then you can go ahead and start marking your POIs. But if there's no hint of continuation on order flow, your POI too cannot change order flow. So those are things that I think we must always pay attention to. POI is not as if the market against POI. POI is just there to take you towards your destination. So if I have a certain draw on liquidity at this high, right, I can expect my POI here to still keep on holding because my target, which is the main draw on liquidity, has not been met. Right, so this is another factor I want you to also put into consideration. But then, where do you find your valid POIs and all? First, we like to choose our POIs from discount or premium zones, depending on the trend. So if I'm currently in an uptrend, I like to choose my POI. First, I will mark this. So if I have this as my range, let's say the market is about making a retracement here now, and I have taken this low here as my point A and this high as my point B. Because it's not at my point B yet until it retraces into the POI, however. But let's just say that's like our point B in anticipation. So what I will do is very simple. I take out my Fib retracement. So you go over here to pick your Fibonacci retracement. Now, for those that have never used Fib in their trading journey, let me use it on this first range here. Because I know some traders are not really so good with Fibonacci. So let me just quickly draw this. Hold on. And apply default. So now, if you are drawing Fib for the first time, we apply the Fib from the start of the impulse to the end of the impulse, right? From start to finish. So right here, this is the start and this is the end. And I'll go over to the settings of my Fib. So this is the settings of my Fib, right? So let's just go ahead and do some settings. I will turn off the trend line And the next thing is I am going to turn off every other level, okay? Because all I need to see here is my equilibrium level. I want to just see the middle point, my equilibrium point. So only 0, 1, and 0.5. They are the only levels I'll be turning on, right? So let me also do color settings here. So, and my labels should be at the right or center. So clearly what I'm having here means that market, after breaking structure here, the low to the high of my range, I'm able to see my equilibrium. Now, equilibrium is like a separating point between our discount and our premium. So below the 50% is known as discount zone, which is a buy zone for us anyways. And above the 50% is known as the premium zone, which is a sell zone for us. So take over here, anytime you want to buy, when you have a structure move like this, nobody wants to buy at an expensive price. So we always like to buy at a discounted price. So if the market starts making a pullback here, all you have to do is just bring out your fib, draw from the low to the high, and you can see where you are expected to start looking for your POI. That means no matter how good I find a POI above here, it is not advisable to trade that demand POI, right? You want to trade at the necessary levels. So here I'll be looking to buy at a discount zone. So once I'm trying to choose my POIs, when we get to the part of identifying POIs on the chart, if I find any of those POIs in a premium level, and this is an uptrend, I won't choose that POI because I want to buy in a discount zone. That's the ideal thing to buy from, like the ideal place to buy from. I always like to use this example. I'll say if this low here is 1,000 and this high is 2,000, as a business person, where would you rather want to buy from when market starts making a retracement? If you buy anywhere around here, upper, above, or in this premium level, we are talking about maybe buying at 1,700, 1,800, 1,000. So that area or that price you are buying there, is it more better than someone that will wait and rather buy at 1,500, 1,400, 1,300? The person is buying at cheaper pricing. It's buying at discount. That's how we call ourselves traders. It's not just a title. We are doing buying and selling, so you must think as such. Even in school, you tell your teachers what's your occupation of your mom or dad. You say my mom is a trader. Of course, I used to abuse that a lot, even though we don't know. What's the one? My mom is a trader. My mom is a trader. So because I know that they are doing buying and selling now, obviously. So that's exactly the same thing we are doing here too. Just the same way, you have someone selling pure water in go slow. He's doing buying and selling. That's exactly what we are doing here too. And as a business person, you always look to buy low, right? Nobody wants to buy impulsively at a high pricing. You must wait to buy at a discount. So that's why the first factor here is you choose your POI in a discount zone for buys, right? And in a sell scenario, we are going to be choosing our POI from the premium level. So in the sell scenario, we're having lower low, lower high like this. So when the market starts making a pullback here, I can bring out the fib and I will draw from the high to the low. I'll draw now, because how do you draw the fib in the downtrend? From the start to the finish. That's the ideal thing to do. However, you see, if I do it from the start here, which is this high, to the finish, okay, it's always going to affect the positioning of my colors, right? Look at this. My color position is always going to be affected. So what I now do is I kind of reverse the whole thing. I'll draw from the low to the high, just so I can maintain the color, right? The red area in the representing premium and the blue area here representing discount. So that means if I want to sell, I would have to wait for price to retrace into a premium pricing and I will sell from there. So I'll choose my POI at that premium, not at a discount level, right? That's the point of that knowledge here. So, but that's still not all. I think I've been able to explain how you can find value POIs using PD arrays. Now, PD array is one crazy stuff that I'll say ICT taught us, and it makes a lot of sense. It's talking about how you select your POIs as price goes down into your discount. So if price is coming from premium level into discount level, what are the levels or the choices of POI you must select or you must look out for, right? Now, PDR is a very good knowledge, but I have some beef with it. You get ahead. Let me just be clear about it. And the reason I said I have a beef with it is because some traders kind of misuse it in terms of they trade it as pattern. When someone says that the first thing according to PDR is the first thing you must find in discounts. Now let me just quickly type out all the discount arrays, right? In discount, the first thing you look out for is bullish integration block, bullish breaker block, liquidity void, FVG, bullish order block, rejection block, old low. So these are the choice of POIs when you are trying to trade in an uptrend, right? As price is going into your discount here, like as price is coming from premium here and is going to discount, the first choice of POI according to PDRA is you look out for a bullish mitigation block. That's the first thing you look out for, right? If there's no bullish mitigation block inside the range, second thing is look out for breaker, then order block. So, most times you would have marked order block or a POI here. For those that know order block at the moment, you would have marked the zone lower here. And you will just realize that price will just come to a certain level and turn and start going up from there. Right? It's not all the time that price is actually doing, leaving liquidity behind or something. Sometimes price has actually mitigated something. You just did not see it. Right. So that's one of the facts that the PDRAs will help you do. Right. So, but I'm not here to even teach about PDRAs because over here I'll first start by teaching the types of POI. Right. And I think I wrote types of POI before how to define. So let's do types of POI. And under here we have three major types of POI. Right. Okay, we have three major types. Let me quickly check on this my note here because I actually wrote down a lot of things, talking about talking points that I want you guys to know. So let me explain them one by one, and then probably you will get another, information from this. One thing I did here is always start from the higher time frame. Nobody builds POIs from lower time frame to the higher time frame. You must always start from the higher time frame. And also using my 3 time frame rules that I've taught is you can find the video anywhere around my YouTube channel here where I talked about top to down analysis. I mentioned that higher time frame is where you are expected to find your direction. You are not even expected to choose your POI on the same higher time frame, right? Because I've seen traders making that mistake. You go to weekly or monthly, you're gonna mark order block there. Who wants to help you trade that one? You want to kill you get there are certain things, there are some certain time frames that are not necessary for some things. POI is not for your higher time frame, especially demand and supply. Right, they are not meant for your higher time frames. Just get your structures and direction on that higher time frame, right? Then you can go to a medium time frame, which I mentioned here, to choose your POI, right? And look at this: determine a valid trigger, which is a signal. Now, what I mean by valid trigger here is under directional bias, where I mentioned here earlier. The first thing is getting your bias right. Right. So the first thing I must check out is I must get a valid trigger. So for example, one of the 6 signals, or should I say one of the things I use in getting my directional bias, there's a model under order flow strategy. I call it SH plus MSS plus liquidity or inducement plus POI. Now you can see that what I have here is a setup definition or a setup, right? First, we have a stop on. I mentioned that earlier, having a stop on first, then MSS, then probably internal liquidity and POI. So here now, once I see this setup here on the chart, once I see all these factors, stop on being present, MSS also being present, internal liquidity present, and all of that. So once I find all those factors, then I will choose the POI. So look at this, MSS the top. So here now, I'm saying that this particular thing is the trigger. Once I see a setup looking like this, then that one gives me a sense of direction, because what I need to do is I need to buy at the POI below here, right? Either the rejection block, so either the reclaimed block or the sponsored candle here, right? So whatever POI I want to use in buying, this one is the internal liquidity. So whatever POI I decide to use right here, that's my trigger. And if I find this setup on the 4 hours, the advice is you mark and you choose your POI on a medium time frame. So if this is a 4-hour setup, I go ahead to 1 hour to mark my POI. It's a very simple thing. And now, don't be rigid actually, because there are other instances that you can still get the POI on the higher time frame. Don't be rigid, because that's why I see me using here on the medium time frame or higher time, which is here on the higher time frame. So I don't want to be rigid around it and just say all the time. So you can apply discretion at will. And also refine your POI on the lower time frame. So I'll be teaching you one refinement trick that I use, one beautiful refinement trick that I use. And also there can never be 3 possible POIs. Now that's clearly telling you that if I have a discount level here, let me explain that. I want to buy at the discount zone, right? There are many cases that you would have valid areas in discount. I can have a valid POI here, and I also have another valid one here. So I'm telling you now that never choose or mark three POIs inside the same range. Maybe someone is also marking maybe on that level here as also on that potential POI. You don't want to do that, right? Always make sure you only have at most you have two possible POIs, right? And how I trade these two possible POIs is this: if I want to approach the first, which is the closer one, right, as price is coming down. The first one here, we always use what we call the confirmation entry. So the first one here is going to be with confirmation entry. So let's do it this way. This first one is use confirmation entry. And the reason for that is there's another level below it. So you must be sure that price is going to react and is about to buy from this level here. You don't want to go ahead and start and buy from here. For example, if you just place a buy order here, thinking is a closer one, right? So what if you take a loss on this one and price still wants to go to the deeper one? You would have taken an unnecessary loss here by just placing that instant entry at that point. So the best thing to do is use a confirmation entry here, right? And the second thing is over here, you can now use what we call the sniper entry, which is you can place a penny order here, since that's the last POI in your dealing range, right? And also always allow gaps for stop loss. So no matter zone you mark for your POI, you would always see me adding few extra pips before it, because what if the market wants to go and take out liquidity here before rising? So you must always add that breathing space for your stop loss, always, right? And so over here, confirmation entry, the lower one here, you can use your sniper entry, right? So you can use your sniper entry at this other one. Okay, what I call the aggressive entry anyway. So these are the two choices of the way you can plan your stuff. Okay, they can have 3 POIs. Okay, I've explained that also. When faced with two valid POIs, choose this other one. Now, make your pick of the type of POI you want to be trading. See, writing all of these things out actually helps, because I might not have remembered this. But what I'm saying here is make your pick. It's very simple. You see, when trying to apply PDRAs, I'll just be clear about something. You can't trade every type of these POIs. Like even right now, when I trade PDRAs purely, I don't even like liquidity void. I don't even fuck with liquid. I don't even like it at all. The liquidity void. So of all these type of POIs, I'm not saying you should directly go and start trading everything. So you can decide that you don't trade hidden zones, because that's where the type of POI, everything is actually classified under this one. So the PDRAs I just showed you now is being taught under demand and supply and hidden zones. These are the two places that you will learn it. Key level is a different word entirely. That's what we have to talk about the MSNR levels. So I will only talk about demand and supply and hidden zones. So under the demand and supply, what are the options we have there? So under demand and supply, the first one is order block. So if you want to spot demand and supply on in the market, we have inside bar and we have two more. We have more than two. So we have order block and inside bar and more. Then under your hidden zones also, that's where we're going to have your popular breaker block. We have the mitigation block. We have the reclaimed block, right? These are hidden levels in the market. So order block is the first one I would like to talk about, and I'll probably mention inside bar as well. So order block is quite simple, very, very simple and straightforward. So and it has rules. So the law that is guiding a order block is like this. We have the bullish order block and bearish. So of all these types, we have the bullish side and the bearish side. So your order block has the bullish side, and it also has a bearish side as well. So let's start with the bullish side of the order block. Bullish and bearish. So I'll just be writing the laws for both. Now, there are laws that you need to check in getting either of these zones. The first one is under the bullish order block, right? The trend must be uptrend. The trend must be bullish. It is the last before a new impulse it must break the previous high there must be imbalance. So these are the four rules I use in getting or spotting my bullish order block for order block. So in the bearish side is just the direct opposites. So the trend must be bearish, which is the last bullish candle. It must break the previous low. And so these are the rules that guides this guy. So let's take a look at it one by one. Before you can mark what we call a bullish order block, and just so you know, the bullish order block here is the one representing demand, and bearish order block is representing supply. So the first thing you must check is the trend. And I'm saying here the trend must be bullish before you start thinking of marking your bullish order block. So that means if I don't have an uptrend, there's nothing I need to do in marking a bullish order block, right? You don't want to go and be marking, probably you are now marking this level now as a supply zone, a bearish order block. In an uptrend though, you don't want to keep on, you don't want to do that. Okay, marking bearish order block in an uptrend, that's definitely not cool. So you must definitely have all these factors right. The trend must be bullish. Now it is the last bullish candle, it is the last bearish candle rather on the retracement leg before a new. Now this is a retracement leg, Abby. These are retracements. So we are saying on the retracement, obviously the market is going down with bearish candle, obviously. So we are saying the last bearish candle on this leg is the one we are referring to as our order block. So if I have this now as a pullback, so I'm saying the last bearish candle on that leg before the market now decides to continue being bullish to go high. So I'm saying here that last bearish candle on the retracement before the market, creates a new impulse. That's a new move that will go ahead. Now the new impulse must break the previous high. Take note. The new impulse must break the previous high. So the bearish candle, last bearish candle here is the definition we have given to our order block. The last bearish candle and all of that. So the opposite is for downtrend, the last bullish candle. So in a downtrend, you definitely know what I'm referring to there, right? The last bullish candle before. So we're looking at the last bullish candle here, which is as price is trying to buy here, bullish candles, bullish candle. So the last bullish candle here before a new impulse to the downside is created. And the new low must be created. The low must be broken as well, and there must be imbalance. So these are the factors that help in defining our POIs, right? These are the things that we put into place to get our order block. Order block is one found at the extreme end, right? You don't find order block in between. Most times we like to mark. I can mark a zone here now, and I'll say there's order block there. Well, I'm not correct, because that's not an order block. Order block is the one found at the lowest points. Just stick it like that. Other things that we can use in choosing POIs along the impulse, they also exist. And that's why I talk about inside bar, right? So for now, this is our bullish order block, and this is a bearish order block. The inside bar is also clear. It's just like this. When you have a bullish candle followed by a bearish candle, and the market still continue bullish like this. So the bearish candle that is inside here is the one that we call the inside bar candle, right? It's the one that is totally covered by these two guys. So this is what we call our inside bar candlestick, right? This is an inside bar candlestick here. Now I like to mark the POI like this. The lowest, so if the bullish candle is the lowest, I will mark the bullish candle. If it's bearish candle, the lowest to the highest here. That's what I like to do to mark my POI. So also with our bullish order block as well, a lot of questions always are, we always have a lot of questions regarding how to mark the POI. And this is where I want you to learn something. If your bullish candle is the one that has the lowest wick, let's say the bullish candle here is the one that has the lowest wick, and your bearish candle only has a tiny wick like this. So when you're trying to mark your POI, most traders always make that mistake of going ahead to mark only, because according to definition, they only learn that the bullish order block is the bearish candle. So if you go and join them and you go and mark you just go ahead and mark only this bearish candle, leaving out the wick of the bullish candle, who they leave out for? Who are you leaving it for? So carry your bag. You must always mark your POI from the lowest point. Very important. You don't want to leave any details out, right? This is how you mark the POI, right? So we have several other examples regarding refinement. What if you have a long bearish candle like this? What if I have a long bearish candle as, let's say this bearish candle is one in the position of my order block here, and the next candle is like this. I have the next candle like this bullish. This is found at the lowest point. So which one will I choose here as my POI? Definition says the last bearish candle stop. So should I still choose the last bearish candle, or where will I choose as my POI here? So now this is under SMC. They are just tricks. They are not actually basic stuff. I will choose the bullish candle here. It's the one found at the lowest point here now. And the reason I'm choosing the bullish candle is because the bullish candle is the one that gave the lowest wick. That's the one that formed the lowest point, right? So assuming this candle here now does not have a wick going below the bearish one, I would have still selected the bearish candle. So these are just like common sense that we apply to these things. You get, so there's a definition based on theory, the last bearish candle, but you go to the chart, you kind of realize some other things. And one other trick I'm going to be teaching you is this. It's called indecision candle. Now, all of this information, I believe as you are watching this video, you are jotting things down, you are keeping notes, and you also go back and rewatch just so you can get all the full information very well. Another thing I would also like to tell you is this. If your order block happens to be an indecision candle, it has a very high chance. In fact, it is the high probability kind of POI, indecision candle, if it is the one found at the position of your order block. What do I mean by that? If the candle here happens to be maybe a bearish candle that has wick on both sides or something like that. So let's assume this is the last candle we have here before price started buying to go high. So that bearish candle, this indecision candle you are seeing here, it is very stronger as a POI than any other thing. Very, very strong. In fact, highly recommended. Do you get? So that's the point of indecision. So if it is found in the position of your order block, that POI is still very, very valid, right? And this is inside bar as well on that POI. Now, they have their positioning, and that's why I said you must know exactly which one. Because if you go ahead and call this one order block, people call this order block too. People call this one order block, but it is not order block, right? It is not order block. This one can just be called our demand zone. This is a demand zone. Normally, even order block also is under demand. It's also representing demand zone, right? Now, let's now apply every factor, the one we started with in the beginning. And that's where we talk about the base. So look at this. Let me explain something. Your POI must have something called expansion. You can see from the foundational knowledge we had earlier, after the consolidation, we have expansion. So every other thing here you are choosing for your POI. You can see that's why the last law is the imbalance. If there is no imbalance present, then the POI is automatically a failure, right? So that's one other thing you must learn how to do. You choose based, there must be an imbalance, right? There must be an imbalance. And let's see which other thing I need to talk about. Then talking about breakers and inducement or whatever, hidden zones, I think I'll just quickly talk about, this is a breaker block here. So we have breaker block here like this, the bullish and bearish breaker block. So this level here is our breaker. In this case, this neckline is our breaker, and this neckline is also our breaker. So the easiest way you can identify or interpret this is very simple. Your breaker is a failed supply. Here, this is what I call it S to D. S to D, that's supply to demand. Now, a supply zone here that could have broken the previous low, creating a new low. So that same zone is like saying we have a supply, a valid supply that has imbalance, everything, creating a new low. And price also going to break below, above that supply. So that same supply that was responsible for creating a new low now is going to be the one. And also now look at the supply was responsible for creating a new low, and price is also breaking above it also this time around. So that same zone becomes a reclaimed zone. So we call it hidden. That's why we call it hidden, right? Because it's not directly seen outside. So this hidden zone here is our breaker block. This is a bullish breaker block here. This other one too is a demand zone. You can see a demand creating a new high that price broke through it as well. is also going to be the supply to go down now, right? But let me now explain something that makes breaker block work very perfectly. It is called the ICT unicorn. Now, ICT unicorn setup is breaker plus FVG. Now, this is where breaker block is being redefined. If at the point of breaking this zone here, if you find a fair value gap, right? If you find an imbalance, which is the fair value gap around here, at the point price is about breaking your the breaker block, that setup is very, very good to trade. Very, very good. So, when you're trying to trade breakers and you are trying to trade a breaker block and you don't have a fair value gap there, you might think of something else. Maybe if price maybe left liquidity above, right? And these are the instances that I use in trading my breakers. So, because I must be clear, I don't like to trade breakers like that. But the two instances I'll use in trading breaker are the ones I'm showing you here. I'll trade breaker block if there's an inducement above it, like this one. Right, these are the instances I use in trading breakers. If there's an inducement above it like this, and also maybe in this other case too, there's another inducement above here. So I would expect price to go and use the breaker block here to go down, and in this other case too, price come and use this breaker block here to go high. This is the instance I like to use breaker, right? Or if it has that fair value gap, and maybe if it has taken out liquidity. Look at it though. There are two instances I want you guys to get here. I'm already giving you some of my playbook already, but I hope you will be able to make use of it. If I also have a downtrend like this, so look at this. This is where I am trying to say the two instances I make use of breakers, like for entry. The first one is I explained the one that has inducement before it. And this other one here only happens or can only be used if price has swept liquidity. So if there's a certain liquidity here that has just been swept, like price went to come and take our liquidity here. So one of the methods I use in trading liquidity rate is, we call it turtle soup. Turtle soup means you are buying at this point, right? You are buying at the point of the rate. For those that don't know the turtle soup entry, if price is about rating a liquidity and you buy at that point of the rate, that's turtle soup entry. But after the raid has occurred and you want to enter after seeing the raid, so this is another level we can use in buying, and that's the breaker block level. One of the best entry I always use is trading liquidity rate. So once I'll just wait for any point, if I have a level of liquidity, just wait for that liquidity point, mark out the eye, let price go there and read out the liquidity. If there's a breaker block there, use that breaker for your entry. That's how simple it is, right? Although breaker is not the same thing, because even when you use a breaker block to go higher, in many other cases, that same point is still inducement. That price later still come back below it, but that first entry would have given you the first push to the upside. You get, so that's one other thing for a story for another day. But for now, I believe I've been able to explain some certain factors in identifying zones. Right now, we are still talking about identifying. We are not even at the application or something yet. These are still level or ways you can identify your POIs on the chart, right? So I think key levels, I'm not talking about key levels. How to refine. Which other thing did I mark here? This is it. Can you see what I mentioned here? You can't trade all type of POIs. You'll be confused. That's why I said of all the type of POIs we have, you must select the exact one you want to be trading. Like if I decide to be trading only order block and breaker block, I already know how I will choose my order block. I know the position of my order block. And I also know the condition that will also make me use my breaker. That means you are not trading everything. And when you have this rule that says you can trade everything, you will end up being confused all the time, because when you have a range like this, a daily range like this, and price starts making a retracement, if your own choice is you trade all the PDRs, you'll be confused at all time, because you always have that worry of which one will work. When you're trying to mark or find all the PDRs inside there, you will always have that concern. Is it going to be breaker? Is it going to be this? Is it going to be that? So you always have that concern. But if I just decide and I choose that I'm only trading just one or two of these POI types, that means if the market presents it, I know I'm trading this thing. If it's not there, I move on to the next one. It makes your decision making faster, right? And it's also help you because you become more consistent in doing that than someone that is not always thinking of what to do. You can make the right decision today in choosing the right POI if you are using numerous POIs, and tomorrow you make the wrong decision because you still have numerous POIs you are making decisions from. But if it's like a closed circle, you just know exactly what to do. You just know exactly what to do. It's very simple and straightforward, which is why some people will just choose only order block or reclaim block. So they know like the choices are very, very straightforward for them. They don't really have to make or think too much. They just go straight. This is like that's the only thing they look out for. So if price comes there, good. If it doesn't come there, fine. Also for them. So that's one of the things I want you to also put in your trading journey as well, right? And that'll take us to which other thing? I think this other law here, don't do predictive analysis. The best is reactive. Is a very good, is a game changer, which I'm not sure I might be explaining it right now. But let's see what we can do before we go. Lastly, I'll talk about refinement of POI. And this one is a banger as well. How do you refine your POI, especially order block? Do you know your order block is a breaker block on lower time frame? So that's one fact I want to establish today. If I have a bearish order block here, or a bullish order block rather, which is a bearish candle followed by a bullish candle. So if this candle you are looking at here happens to be my POI, or let me just start with the basics of refinement. Let's start with the basics of refinement. So in refinement, if I have this as my order block, right? If I have this as my order block, like if I can find this at the lowest point, you know what I mean? So what do you need to do in refinement? Now, most traders don't know this, but there are certain levels of your POI. First, let's start by establishing the levels of your POI. The lowest point in your POI here is called the distal line. Right. Now, the other one here is called the proximal. So just taking note of this, if this is in another block setting, we have the proximal and discount like this. So the higher one is the proximal and the lowest one is the distal line, right? So how do you refine? This is very important. You see, and most times people don't know that refinement is very simple and not the way you have been taught. I would say you find a POI in 4 hours, you go to 15 minutes and go and refine. That's not the way it is. You know, that's the way it has been taught in SMC. I used to do that also, but there are simpler tricks you can apply. So first, if you have a POI like this and you see the second candle, or let's just say we have a POI like this and price continues pushing up like this. Now, there's a very high tendency that when price is coming back for the entry, I think I missed talking about the entry system, and that is RTO. So for order block, we use RTO. That means we turn to order block. You know, earlier I only explained how to mark order block, you know. So when you have all these factors aligned for your order block, it is after having all these factors, the bearish candle saying price creating a new high, imbalance found. It's only after finding all of those factors that you can trade order block, right? Order block is not traded when it's about forming. When you have found all those factors, return back to the order block is where you get to your entry. So when price returns back to that order block is when we enter to go higher. Okay, that's RTO, right? Return to order block. So the same thing here too. If you're about to have an RTO back to this level, which of the levels will I choose as my POI? Now, the proximal here clearly has a distance between, it has an imbalance. So, you know, you can be able to expect a reaction from that proximal to go higher. Now, let me be clear about it. I've mentioned proximal. Proximal is the one at the highest point. Distal is the one at the lowest point. The one at the middle point, that's the 50% of your POI. Is called mean threshold. Mean threshold. Very, very important as well. You know, some people just mark the 50% and place their trade from the 50%, but I don't support that. You must learn my trick on refinement to get information. So look at this. When you have this kind of thing now, I can be expecting a reaction at the proximal to go higher, which is I can expect price to just come back next time and, you know, a bearish candle bouncing off the proximal and we continue our bullish move to the upside from there. You know, that can be my expectation, right? The price just gonna bounce off the proximal and go up. Now, let me explain other times that this will not happen like this. You know, and now I personally do my refinement. If this particular week here should enter the territory of my POI, which most traders don't always pay attention to, right? There are times that almost instantly a little bit will just pierce into your order block or your POI and price will just keep on pushing higher. Now, you did not pay attention to it, or you probably just like think it's a normal thing, right? And you still mark your POI like this. Now, of course, the point of refinement is to reduce the zone so you can have a higher reward, right? So if I have this now and I'm still choosing my POI like this, I am going to be what? I'm just killing my trade. Because if price is coming back next time, it will not react at the proximal anymore. It's going to go below that first initial reaction. So what you need to do next time you are trying to refine is this. When you have that price has mitigated some part of your POI, just refine, take your POI and take out that part that has been refined. Just do this. Okay, this is what we call refinement, right? Just refine, take out that part and leave only the body, right? This time I'll just leave only the body. And now, just so you know, I think that's one trick. Let me not go further than that. That's one trick. Another thing is the lower wick here, this particular point here, the lower wick you're seeing here is known as the rejection block. So that lower wick is called the rejection block. So I can have a POI like this and price to go to the lower wick. So that's called the rejection block, which in key levels, we are trading MSN now. That's what we call the A-shaped key level. But in other in let's say SMC, we call this particular load the rejection block, right? So and that's one other trick I use in refinements. Then lastly, let me just talk about this last one, and that is, do you know that your POI on a certain time frame is actually something else on a lower time frame, right? What do I mean by that? Your order block on a higher time frame is a breaker block on a 1 hour. So please, I want you to pay attention to this. If I have this on 4 hours, for example, H4, do you now know that this pattern of order block on the 4 hours here is going to be a breaker block pattern on a 4 hours time frame, on a 1 hour time frame rather? And this here even helps in making decisions of refinement. So on H1 is going to be a breaker block pattern. And many people make a mistake. Let me now explain one of the things that you can use in refining. Like when I mean refining, proper refinements, not all this bullshit refinements. Yeah. So if I have this POI on the 4 hours and I'm trying to reduce the POI, if you go to 1 hour, take notes, 4 hours to 1 hour, you realize that this your order block here has a pattern that looks like this on the 4 hours time, on the 1 hour time frame. So normally what we do about refinement, that will say we refine the candles, would have been that your bearish candle, because on the 1 hour, you will now find a bearish candle here, which is the pick that most traders kind of fall for. You know, they choose the bearish candle here. The actual zone that is being marked is still from the highest point here to the lowest point. That's the proximal and distal line from 4 hours. But, you know, it's going to be bigger on the 1 hour time frame. So they believe that this particular candle here, the refined order block on the 1 hour time frame here, is what most traders now go ahead to select on the 1 hour, thinking they have done the best trick of refinement. And that's not true. Because this is your POI you have marked here on the 1 hour time frame, and you have selected, you know, let's say this time around now, you have now selected this zone, this lower one, as your refined POI. I don't have an issue with you. The only issue I have with you is that you realize that sometimes price will just come back and we touch that your 4 hours high that you did not mark, because now you would have probably refined your POI from this 4 hours level to something small like this because you believed you have refined on the 1 hour. You know, you took a bigger zone, you have reduced it to a smaller one. Well done. Like I said, your POI is a breaker on 1 hour. That means if your breaker block is valid on 1 hour, that breaker block is the one that price will use. Most of the time that you can use this is when if price is going up like this. Yes, if there's no imbalance found around, I told you, when we have breaker plus imbalance, something they happen back. That means if this breaker block, the neckline here is what I mean. If this breaker block here has an imbalance here, you would expect price to come back next and touch from the top and go up. It will not come to your own lower order block, right? But if there is no imbalance here, like there's nothing on the left-hand side, or price even is struggling to break this high before it happens, then that's the time your lower refinement here will work, right? So I'll take you to the chart and show you all of these things before we end the meet. Okay, we're not having a meeting. It's a YouTube video. So I hope you guys make sure you just like and you subscribe to the YouTube channel and share with friends and family, because I'll be giving out information like this I'll be making more videos on POIs, you know, view videos on POIs, view chart breakdowns on POIs, so you can understand a lot of these things I've been talking about. So let me check USD card here. Let's start by, I'm going to use two charts, but I would like to start with this USD card here, 4 hours. Okay, let me use a pure chart, USD card. Yeah, this is an example of the order block I want us to see, right? I want you to see this. This is a 4 hour zone, actually. I'm on the 4 hours time frame here, and I want you to see something. So if I want to refine this zone that we're looking at right here, if I want to define this zone that we're looking at right here, how will I do that? So the best thing we always do is when you mark a 4 hour zone, you go to 1 hour time frame, isn't it? And for those that always go directly to lower, only 1 minute, you're joking. So this is now the zone. This is the actual zone. So according to refinement that people choose, which I just explained now, is some will prefer to choose the lower POI here, thinking they have been able to reduce the 4 hours order block to a much smaller one, trying to maximize wins. No doubt, there's no problem about that. But what I've been trying to say is that if you have a breaker block, the market tends to respect the breaker block. If see now, this breaker block here has an imbalance, so that's why the breaker block here is definitely going to hold. Is definitely going to hold. So we are talking about something like this as a refined POI. So instead of me marking the whole 4 hour zone, the refined POI is the one we have right here. And let's leave. Right. So the 1 hour refinement level I've done earlier, if I was going to go by that, that means I won't have gotten an entry. Right. So this is the clear difference between that. Let's check on that example. So let us use pounds JPY here as an example. According to the outlines I gave earlier, I said find a valid range. So over here, I will be using this particular range I traded last year as an example. So over here, this was the valid range I was able to get. This is the break of structure to the upside. And you can clearly see that. So on this particular range, what would you do? This is our higher time frame here. So let's take it that we're marking from the low to the high. And you're going to select your POI. I told you, really do we select our POI on the higher time frame? But over here, I can see a clear order block according to definition. So what I'll do next is to go to the medium time frame, which is a daily time frame on this one. Now, when I get to the daily time frame, all I need to see is very simple. Look at this. According to what I just taught you now, you're going to find your POI in two ways. Either it's going to have a breaker block pattern according to what I showed you. And you can see we have the order block and we have the breaker block. Now, this breaker block here doesn't have imbalance at the same edge. Look at the breaker block here. The failed supply candle now, and you can see there's no imbalance at that exact point. You can see this week to week base inside. So definitely I'll be choosing the order block as my POI, my refined POI instead here. Now, when the market goes to that refined POI, this is where I said, if you want to define or you want to start using order block or POI generally, your directional bias comes first. That is where this particular knowledge comes in. If you don't have that POI established, it's going to affect whatever choice of POI you want to just be marking. POI is not just a thing you just mark anyhow and just expect the market to just get any POI and react and just buy or sell from there. It goes beyond that. There's a logic behind how price moves. So if you are going against that logic, no matter what you are doing, for example, don't we have a POI here? We clearly have a POI here and it's valid. You can see it's valid. It's a valid order block here. It's breaking the previous high and all of. So why the price not respect it? Why the price have to trade into internal range liquidity? Even this other level here too. Why is this level here not respected as well? That's to tell you that what market doesn't just respect any zone or anything that looks like a valid POI. The market still has its own sense, right? There's also a way price is being delivered. And that's when we talk about the delivery of external range liquidity to internal range liquidity. Now, that might be a thing you have to go and read up on, right? So, because all of this, see, everything you are seeing here, they are all internal range liquidity, everything. Why? Because we have an imbalance below that has not been mitigated. So, all these mitigations you are seeing that the price was doing higher low, that it seems as if they were all, mitigating perfectly. Clearly, they are all part of the range. This particular one is even the external range structure, right? And price came back eventually to the main low, right? The main internal POI that we have here. And of course, it's buying from there to go high. So this is where I now want to explain something else. Because when price creates something like this and we have higher high, a higher low now that has been established, where is price going to next? It's going back to the previous higher high. So this is where I said your order flow is going to be valid, because no matter the structure you mark here now, no matter what you want to do here, all you need to just do is just find valid order block or POI. Buy POI or demand POI to your target. It's as simple as that. So when you have a direction determined, and that's why I said directional bias comes first. Once your directional bias has already been set, it helps and aids your own trading itself to your target, because here now all I need to just do is find the range. And tell you what do I have here. See, I have ranges like this. The market was forming higher highs, higher lows like this. So we have higher high. This is a range here. This is on that range here. And all the way up now like we have there. So what you see here is the market creativity. So let's just find the POI that price used for each of this range. So let's check the POI of this one on the left, and let's check the POI of this one too on the left. Right? I will not talk about the internal range structures that we have there. So what do I do? Since I'm having the structure on the daily here, my POI will be selected on the 4 hours time frame. So let's do a replay for these levels. I'll do a replay for this first one. And let's see where the market came to respect on the 4 hours time frame. Now, on the 4 hours time frame, what do we have that the market came for? So clearly, this is our range on that time frame. And we have this low as internal liquidity, obviously. Okay, I don't want us to use this one here because there's no break of structure on the left-hand side. So let's leave this one and go to the next one. I don't want those, because the other ones that we've seen that there's break of structure. So this one doesn't have any break of structure. And this is the one that has created a new high. So definitely this one will have a break of structure that we can reference. So this is a break of structure we're going to reference here. So I want us to always make sure we reference that always. So a break of structure to the upside, we're going to look for a retracement down. So, and let's say on this time frame, I choose my POI to be this, the last bearish candle and stuff, right? I told you are going to refine on the lower, on the medium time frame. So on the medium time frame, let's see, is price coming back here now? Or we go over to 4 hours. So my medium time frame, what do you think I would do? Look at the POI. Can you see what I'm telling you now? The OP, see this area here now, this part here, that price has mitigated. That part is already out of the way. So the mini POI left is the VK. Can you see what I mentioned now? This is the VK block here, and this is other block. Right, so I can decide to refine to just my breaker block alone, and I'll still be right, or just my other block here, right? So this is how the POI has been refined. This one we will be taking as internal liquidity self. This low to be taken as internal liquidity to sponsor the next buy to the upside. So let's go back daily and let's play. So this is our daily refined zone. So on the daily time frame here, what do you think I can still do? Because I've refined my zone on 4 hours, but there's another thing I also do again. I can still go back to my higher time frame and refine, because here the lower wick is called the rejection block, right? So I can refine to this daily rejection block here, and I'll take that low I have here as liquidity, and let's play and see how the market, probably came back to that level to expect it. So all this structure, I see all this lower high structure, there's a name for them. They are called the counter trend structure, the substructure. So market formed that before coming to our POI here, and you can see the rest is history. So this is how you choose POI. Now, this is a very, very big range, right? This daily range is a very big one. So you can apply the same knowledge on lower ranges and you'll still be right. For example, let's check out gold. Now, gold gave us something that is very, very, that makes a lot of sense. And I would like to start it from this area. Okay, let me just use this particular case study here as a starting. So I had something around last year that we expected gold to react at this level, and it's going to go to the all-time high. That was my setup last year. We had a rejection from here, and of course, this internal range liquidity, price will go back to the external range liquidity. So that was just the basis of the setup, right? Reacting at internal, go back to external. So now this is a different engine for getting directional bias. I told you earlier, I said you can use any engine in getting your directional bias, but any method you want to use in getting bias, any one of them always have order flow. Okay, from the beginning, that was what I shared as the first: directional bias, then order flow, then entry. So you get order flow before you get POI. So directional bias comes first. Now, the weekly time frame rejection on that internal range has given us a sense of direction that price was going to trade and go back to this high. So what I need to do is go and find order flow, which I can clearly see on the 4 hours or even lower, because this one is very straightforward. I already know where price is going to. All I need to go and look out for is order flow. It's as simple as that. It's not even complicated at all. So look at this. We have the market creating, structures. That's now what we call the order flow. Okay, the market from the point price reacted at that liquidity point here. The market started building up a bullish order flow. So you can see the market forming higher highs, higher lows, higher high like that. So the market already started respecting, or should I say, creating higher order flow. You can see that's been creating order flow like this here too. And one other thing I would like to add, that's the final thing I would even talk about, is called reactive versus predictive. Now, I said, don't do predictive analysis. The best is reactive. And this particular thing is where most traders are still kind of getting the idea of choosing POIs wrongly. For example, let's say I'm even trading this internal range here. I want to trade this range from this low to this high. Let's just assume something there. Like I want to trade that range and I want to choose my POI. Do you know that most traders would like to choose, they want to get the exact point of the POI. And that's where most traders kill themselves. You get like trying to figure out the exact point and trying to worry about the exact points that price was going to be, buying from or something. So what I would do instead is this. I have a zone here, right? I have a zone here. And I also have another zone at this area here. This is on that demand zone here. Now, you see what I do is, earlier on I mentioned, I said you can have two POIs in a range. The first one you use confirmation entry, and the other one you can use your instant execution, right? So if I have this kind of thing on the chart right now, and price got to the first POI, and there's already a reaction leading to a break of structure, what we call a displacement. Price has already displaced a level like this. So once I already get that, I will now be able to, this is what I call the reactive analysis. And that's one of the best. People don't know this, but the best time you can get the best order block or POI is when there's a reaction at a level. Now, let me come again. The best time you can get the best POI is when there's a reaction. You see, the prediction part is when you are trying to choose which POI price we use. For example, now, as price was dropping here, making the retracement here, one of the killers of many traders is they always try to predict the point of reversal. They will mark this level here. It can buy from here. You get it can. The best one is reaction. Let price get to your level and react. If it reacts at a level, obviously a new structure will form. That reaction is always that's the best time you can see the best POI to choose. Look at this one now. Look at this POI level now. What exact level would you have chosen here as your exact POI? Let's say you even mark this one now. You see the market even came there a little bit. So you really can't tell if this area is the exact point. So what happens instead? Let price react, and that reaction gives the best POI. So here now, we are seeing price reacting after taking out the sell side here. A previous low was cleared. That's total soup. And we are seeing, so I'm going to choose this order block here. The last bearish candle before the push up. That's the order block. And according to how we refine, what do I tell you about refinement? If you have a 4 hours order block like that, what do? You go to 1 hour and you're going to refine. So on the 1 hour time frame, can you see that the breaker block here has imbalance? And this is what I was talking about. This neckline here, it has its own imbalance. This neckline, which is the breaker block, is going to be my refined POI. And look at how price sniped away from it as well. It even has inducement. And this one I told you again that the times I also like to trade breakers are when it has inducement. So this one has inducement, and it also conforms with the law of refinement I shared earlier. So this area became the preferred area. Even when price got here again, you can see there was another reaction there. This is another reaction from that level. Price breaking this recent high and now coming back to the other block. This is the best time. I told you also about the indecision candle at your point of POI, right? So this is another indecision candle here being used as a POI. So far this one is this is a 1 hour POI. If I want to refine, I'll go to 15 minutes time frame for refinement. So let's see if we can refine that, just to show you how to refine based on that logic I shared earlier. So let's see, we'll go to 15 minutes time frame here. And what do you see? You can clearly see that the market also had that neckline pattern I was talking about, right? So one would have decided to choose the order block here. But look at this. Look at this is the O level, right? The full POI. But some parts here, look at it. There was no break above with imbalance, clearly. So That's why the level here will not be used. The remaining level here is what would have been used, and price came back there to buy. So it's as simple as that. This is one of the ways you can refine your POI also. And I believe this information is going to go a very long way in giving you clarity. Okay. The last piece I've mentioned is the best I think you should take of all the advice or lessons I've given so far. Reactive over predictive analysis. Predictive analysis will always kill traders because you always be worrying about which one will work. Will it be this one? Will it that one? But rather wait for price to react at your POI before you now decide to choose. Don't go ahead and start jumping on the, start jumping in front and thinking this one should buy, this one should not buy. Reactive is always the best. Reactive is always the best. So finally, to summarize everything, I mentioned that predictive analysis is not always the best because thinking about predictive analysis, it's more like saying I can mark a POI here, which is a demand zone, and I'm taking it that this POI here is going to hold, right? Now, that's based on prediction, right? Just predicting that, okay, so far I have a demand zone here, it must hold, or probably if I have a supply zone anywhere, they must hold, right? That's not that. I don't like trading that kind of thing. So finally, to summarize everything, right? The difference between predictive analysis and reactive one is more like if I have a zone here, it's like having a zone at this point here, and I have marked that zone as my POI, right? So most traders actually believe that once they mark a zone, they are predicting that the next bullish run that is going to happen, the next impulse that will happen should be from this POI, right? So if I take a trade as price arrives at that POI immediately, hoping that that POI is going to be the one to lead price to continue, that's based on prediction, right? Compare that to someone that is trading based on a reaction. And that's why the CLT concept and all these other concepts, they are much defined because you will not choose POI until you see certain things. For example, if I was trading CLT now, it's when I see my total soup and I see my MSS, right? I know that I will not get my entry using any of my key levels, right? So the point at which I'll use my POI is at the entry stage, not at the initiation stage, right? And let's take a look at this. Let's break this particular chart down. This cell. Let's go to the 15 minutes time frame and let's take a look at it because that was a daily CLT actually. So let's take a look at it. And you can tell that once price was reading out a previous day high, this high happens to be the high of a previous day. Clearly, let's apply session break so we can see the previous day. So the highest point of a day is the one price went to go and take. So as price was reading out a previous day high, what I need to see is a displacement on the line chart, which happened here. So the move that went to take out that liquidity, this is the move. This is the displacement I need to see. After seeing that displacement, I'll look for my entry, which is, like I said, key levels, either the A-shaped key level, the V-shape, but in this case is in the downtrend. The A-shaped key level here became the entry point, and you can tell what price did that be. Price came there. Now, since I did not talk about key levels in my POI, I will just talk about the zone we had here, right? And this zone here is a rejection. Well, in fact, where price came to react from is a rejection block anyways. So, and that's where we sell from. So that's the point I will get to use my POI. The POI here is based on the reaction at this liquidity. That's when the POI will hold. But if I was just choosing any POI anywhere randomly and say, this is the POI, trying to just predict that the POI, okay, for example, if I was going to trade anything on the left-hand side here, will I know the exact POI to choose from? There are so many POIs there. So the best thing is what? Trade based on reaction. You can see, in fact, when price rated out the first liquidity here, the same thing happened here. Look at it. Price initially took out liquidity here, which is a reaction. And we had initial entry from here. You can see we had initial sell entry from there. Now, the entry and the POI here too was based on reaction. So that kind of POI is always the best. In fact, more better than you marking a POI of monthly, weekly, daily, or whatever, because those ones are higher time frames and they are more of predictions because you have to wait for price to get there. You don't want to instantly jump on a daily time frame POI or a 4 hours POI. Most times, the best thing is to still confirm, see the reaction happening there before you join. And that is what I want everyone to do, right? Of course, that's the point of sharing the knowledge. So you can know the difference between the predictive and the reactive. You understand? And of course, you know how to trade it accordingly. Okay, I think what do we have here? Also, so that's just the difference between the predictive and the reactive. So, and I hope with this few knowledge and nuggets I've given to you guys, you would be able to trade better. And if you gain value from this video, I want you to share, like, drop a comment, and make sure you share with friends. It's very important. So thank you guys for watching, and I'll see you definitely on the next one. I remain Poppy Joe FS. Thank you.